discuss the latest chip restrictions and what they mean for companies like AMD and NVIDIA, let's bring in Olivier Blanchard, Research Director of the Futurum Group. Olivia, thanks so much for joining the show.
Hey, good to be on. Exciting day.
Yes, certainly the case, although not necessarily exciting if you're investors in NVIDIA and AMD, because you're seeing the stocks get absolutely crushed today, down near the lows of the session, both down about 10% right now, following basically we've learned about the financial impact of those export controls on chips to China. Tell us, what is it that has investors fretting so much?
Well, there's so much going on, and I think that's part of the issue, right? So I think the investors are already rattled because of the uncertainty, because of the direction that the stocks have been going for the last few weeks since the tariffs have been on and off and announced. So on the one hand, there's the performance, the sort of like trending, the trajectory and the momentum of all of these tech stocks. On the other hand, there's also this sort of daily anxiety around the uncertainty. We don't know what's going to happen tomorrow. We don't know what's going to happen in 2 hours. And now, on top of all of that, to kind of add to this sort of like downward momentum and this pessimism, is this new thing, which is sort of an expansion of what we had before, which is just export controls on really powerful AI chips, particularly to China. And so finding out on top of everything else that AMD and NVIDIA are going to be required to pay for export licenses that are going to be fairly financially difficult for them to handle, also just sort of like digs into these stocks that are also that are already a bit vulnerable, let's say, because of everything else. So it's just an accumulation of all these things that's making investors not happy about NVIDIA, AMD, and a lot of other AI chip stocks today.
Yeah, they're bringing all the chip makers, their chip stocks down with them. So in terms of the financial impact, NVIDIA expects a $5.5 billion charge in fiscal Q1. AMD, it's more like $800 million in charges. How much are these charges game changers for their business?
Well, I mean, any kind of unexpected expense or cost is definitely not a positive, especially with the current regime essentially weakening these stocks. So it's just this accumulation of all these things. I think that NVIDIA specifically and AMD as well would normally be able to absorb these types of this type of cost or additional cost pretty well, were it not for everything else happening at the same time. So it's a little bit of a snowball effect right now. But ultimately, I think some of your other guests in previous segments have mentioned the fact that this is all just generally a sort of ongoing, very fluid negotiation with the Trump administration, and I believe that at some point we might see more exemptions or at least some carve outs for some of the chips. One of the things I noticed is that the export license applies to chips that NVIDIA had made specifically to get around export restrictions before, so that it could send a sort of a special version of some of these chips to China that fell below the thresholds of previous export controls. And even those require an export license now. So what we might see in the next few weeks is a carve out for those types of chips. And it's sort of like a return to the way things were.
Okay. I was taking a look at a note from Dan Ives, and he says from Wedbush, NVIDIA is one of the most important pieces in this chess game with China, and restricting its H20 chips is an important move that will clearly spark more actions from Beijing. But ultimately, the street is laser focused on which side blinks first, the U.S. or China. Give you a chance to weigh in. Which side do you think will blink first? And ultimately, who prevails? Because it doesn't seem like we've reached any agreements yet.
Yeah, no, he's not wrong. That's a really good way of putting it. I think that barring NVIDIA specifically having its own influence as a really important strategic and economic partner to both countries and to the world in general. So I think that's kind of like the third element here, the third player. But I feel like China has better cards than the United States. I think that they have a long-term strategy. They have more discipline. The United States right now feels a little bit chaotic in its implementation of tariffs, and it's having to sort of like take two steps forward, one step back, and sort of rearrange its tariff regime. So I feel that China is going to be more patient, more disciplined, and it's not a question of flinching so much as just being a little bit more patient and being a little bit more the adult in the room for once. So there's that. But I think also, and this is something that prediction didn't really take into account. NVIDIA has a voice at this table. NVIDIA is a player. NVIDIA has tremendous influence, and so I wouldn't take them out of the game. I think that NVIDIA has a lot of cards to play too, and I think that in the next few weeks we'll see NVIDIA play those cards.
Okay. All right. Well, we'll definitely be on the lookout for that card game. A lot of kind of gambling, casino, gaming references here. In terms of chess, I should say. In terms of the stock price performance, though, as I said, AMD and NVIDIA down 10%, but we're seeing chip makers lower across the board. I've heard that Broadcom could be the next kind of target here. Who should we be thinking about as getting hit next? And then anyone that could actually walk out of this a bit more unscathed.
A little bit more unscathed, yeah. It's yeah. Let's see who bleeds the most, who can bleed the most. I think Broadcom is definitely on the list. I think it's basically any chip maker that deals with AI, whether it's in the cloud, but also let's remember that a lot of AI is moving to the edge. So where we're seeing Broadcom and some of the other chip makers being impacted now is as people realize that there's also AI on PCs, there is AI in phones, there's AI in cameras, smart cameras, drones, robots, cars. There's AI in everything. And so all of these chip makers, and especially the ones that have very complicated supply chains that involve China, or where any production or packaging is happening in Asia specifically, where most of the highest rates or tariffs have been applied to, those are all going to be impacted. So I think that we're going to see not a domino effect, but just generally the chip makers across the board get hit. But I think it's also a very temporary situation. I feel that by this summer, or at least by the fall, all of this should have settled, and we'll have a little bit more clarity on where the tariffs will land and where the supply chains are going. And so I think that any chip maker, obviously, that has manufacturing and packaging capabilities in the United States is probably going to bleed a little bit less. But some of the other ones might probably be able to arrange carve-outs or special deal or exemptions with the Trump administration. It's just going to take time.
Okay, so there's the China risk, but then there's also the fact that we heard already from ASML, obviously on the semiconductor equipment side, and they posted mixed earnings, a weaker than expected outlook. Net bookings also fell short of expectations. We'll hear from TSMC tomorrow. Obviously, we already have an idea of their revenue number, the top line number. But what's the takeaway based on mixed results starting to come out of this space as we think about what we could hear from some of these other names in this semiconductor sector?
Yeah, not to wax too philosophical, but everything is temporary. So is this. I think that fundamentally, if you look at the AI space and the technology industry, the technology sector, everything was pretty much on a pretty positive trajectory before. There was demand for AI. AI is definitely driving a lot of the investment, a lot of the IP, a lot of the innovation, and a lot of the products and revenue that comes on the back end of it. So all of the fundamentals of the tech industry and how AI was driving everything forward really look strong. The only thing that's happening right now is this tariff war. So as soon as we have some clarity on where the tariffs land and where we are with the supply chain and what the tariffs will be, what the ultimate cost to every one of these companies will be, I think we'll start getting back to a normal sort of investments playing field. And so what you're seeing now is temporary. I think that within the next 6 months, a lot of the uncertainty that we have now, a lot of the hesitation and nervousness will eventually move away, and we'll make space again for where we were before, which is just investing more in AI, investing more in chip manufacturing, and investing in more of that technology spends that technology needs to be able to move forward. Yeah.
Okay, so just to kind of wrap things up, what's the key takeaway for investors then at this point, if they're looking at, say, an NVIDIA that, they might have had FOMO in terms of not investing, and now they see it down 25% year to date. So many of these names have been really hit hard this year. Given that everything is temporary. It could take a few months to kind of see how this all plays out. But what's the takeaway for investors right now?
Takeaway is don't panic. Be professional about it. Keep your head about you and look at the fundamentals of the business. Now, obviously, there are going to be additional costs now for a lot of these companies. Some manufacturing and some of the supply chain is going to have to move. That takes time. It takes expense. These exports controls and the export licenses that companies like NVIDIA and AMD are going to have to pay will affect the bottom line. But ultimately, again, the fundamentals of the technology sector are strong. So as soon as we get over this hump of uncertainty and sort of chaotic tariff wars, which should not take long, things should get back to normal. I'm not going to prognosticate on where the bottom is, but there is a bottom for this. To me, it feels like an artificial bottom. The fundamentals of the technology sector remain strong. And I think that's the operating principle that investors should probably at least keep in the back of their heads as they make decisions.
All right. Well, we appreciate you helping us make sense of it all. Olivier Blanchard, Research Director at Futurum Group. Thank you so much.